All right, so I had a bunch of questions regarding how do you tell if a level is strong or weak. So we wanted to just look at the market, and I like to use pivot highs and lows because we all know that only institutions and banks can truly create pivot highs and pivot lows in the market. So for example, in this case, for the market to be rallying up like here, and then for it to form a pivot high, come back and then make a lower high, that's only something that big money, so banks and institutions can do. Because as we know, us retail traders, we are only pawns in the market. So I like to look at pivot highs, and I like to call it a supply and demand curve. So obviously you're going to have the strongest level of supply reside up near the pivot highs. Oh, whoops. You're going to have the strongest level of supply up here, obviously. And that's just because this resides at the peak over here. So this is where price was not accepted, right? So whenever they IPO'd in early, 2014, it formed a rally-based drop. So this is the origin of the drop. So this, quote-unquote, would be the strongest level of supply. And you can see as the market continues to move, it continues to form more imbalances. There's an imbalance there. As a result, it forms an imbalance here. And then we get more imbalances. We get a rally-based drop here. So they form all over the place. So the question is, how do we determine what's strong, what's weak? For one, we want to start with higher time frames. So for example, this is a textbook rally-based drop, monthly supply zone. Right here, rally-based drop. Right, level forms. The level forms here, and then price fades, and later on comes back to fill the imbalance, or fill the sales that didn't originally fill because price sold off too fast. And we got the retest into the level, so it forms the rally-based drop, or it forms a rally-based drop supply, right? So price fades, and then you get the relief rally back into the origin of the level, so they can fill their sales, and then price continues to fall. So obviously, the higher the time frame, the more significance that a zone will have, and levels form upon more levels of each other. So for example, here was the rejection over here into the retest here, right? So then this zone can be deleted, and then we have more imbalances that form right here. So this is still considered a level of supply. And then, so for example, when we want to call and say what is strong and what is weak, right? A strong level will be one that gets retested in an appropriate period of time. So for example, if the banks are selling at this imbalance right here, correct? Right? So, let's just rewind this. So the banks formed this imbalance right here, correct? All right. And then it took, so this is a monthly sales zone. It took 1, 2, 3, 4. It took almost 5 months for it to come back into the level, which tells me that there was aggression to fill the sales, to fill sell orders. So when you see like an imbalance form like this, you actually want to see price come back to the imbalance. You want to see it act as a magnet, which tells me that there is effort for them to push price back up into the level, into the origin of the imbalance, to fill their sales, right? So in this short period of time, we had a pushback right into the imbalance here, a lower high, right back into the level, right? So this was obviously a strong level because, relative to time, like on a monthly time frame, this took 4 or 5 months for price to retest this imbalance, and then they finally were able to crush it. So you basically want to see a strong level will be one that becomes tested in a relative period of time. So on a monthly time zone, sometimes that may take anywhere from up to 3 to 5 months. On an hourly time frame, sometimes they may take anywhere from 1 day to a week. On a 4-hour time frame, sometimes that zone may be revisited in 2 weeks. But if a level isn't touched in quite some time, odds are it could react. There could be some outstanding sale orders there, but it's not going to be as reactive as one that gets retraced into, because the effort to get a relief rally back into the origin of a supply zone tells me that there's effort for them to want to fill their sales. So yeah, this is a monthly supply zone, but think about it. The banks are not going to want to wait, years and years for them to fill their sell orders, right? I mean, let's just say that this is supply here. The banks are not going to wait all this time for them to finally fill their sales here. It's just not realistic. We all like to make money quick and whatnot, and same ideology with the banks. They're not going to wait. Let's see, this formed in 2015. They're not going to wait 6 years to execute their sell orders. So this would not be that strong of a supply zone. This would not be not that strong. Reasoning took far too long for price to retrace into the level of supply. And this is really important, guys. This thing right here. When we see imbalances form throughout the day, and you see aggression for the market to retrace or to either retrace or to relief rally back into the origin, odds are that it is going to be a quality level of, or it's going to be a quality level. I mean, here's an example of why we rallied last time. Here is a monthly rally-based rally buy zone. Remember, we're in uptrend. So, for example, here would be another quality level. Let me delete this just to clean up the chart. But here's another monthly level of demand right here. So let's just say that the market were to retrace back into this level. This would be a very strong level of demand. And if you can answer my question, why would be a strong level of demand? Well, look at this. This imbalance formed in June, right? So let's just say that Twitter does collapse. We get like a 3-wave ABC correction back into this level. Well, I would be getting long in this level. Why? Because in terms of time, what's going on here? Delete. In terms of time, this imbalance, let's just say that it did fade back into it. In terms of time, for a monthly level, it really didn't take that long for them to fill these buy orders. So let's just say that this did retrace into this zone in like the next month or so, in the next 4 to 8 weeks, I would be getting long here. But let's just say that scenario 2 is that Twitter decides just to ramp up, go all the way up here, blah, blah. Let's just say that it, decides to just take off. And in a year, it collapses and it fades back into here. I would not be taking that trade because, look at how long it would have taken. It would have taken almost, it would have taken almost 800 days to retrace back into this level. So this is very important. Only banks, institutions can form imbalances. So the sooner the imbalance is retraced into, the more powerful. All relative to time frame. So again, this scenario 2 right here, let's say if Twitter does take forever to retrace back into this level, I would not be going long here because it just simply took way too long for price to retrace back into this level. So these buyers at this level right here, let's just say that the banks are loading and they do have outstanding buy orders in this level here. They're not going to want to wait, 800 days, they're not going to want to wait years for them to fill their orders, right? They're going to want to get it sooner rather than later. So again, if price were to retrace back into this level, within 4 to 8 weeks, I'd be taking the trade. No doubt about that. And, again, it works in all time frames and whatnot. It's all relative to time. I mean, the higher the time frame, the longer it'll take. But, here's another example of, I'm another monthly level that didn't take that long to retrace into, and it's sort of pulling Twitter back right here. But that is very, very important though, in terms of time. I mean, this level right here would not be. I would not be looking to take a short of Twitter at 48.30, simply because. Let me type this out. Would not short because it took way too long for price to retrace into the inbounds. And again, if you were a bank or an institution and you did start to load Twitter in the $31 area, remember right here, you're not going to want to wait, years or if not months to get your orders filled. You're going to want to get it filled sooner rather than later. So time is very important, with the way that I trade at least. If you can identify levels, we want to make sure that they are on a higher time frame, and you also want to make sure that we are also looking left and then trading the white space to the right. There are a lot of smaller imbalances here that appear in all time frames. But the thing that makes them strong again is how long it took price to retrace back into the level. So